Welcome to the world of the PayPal problem. Now, what is the problem? Seems like every week we're hearing a story of some poor marketer having their PayPal account frozen with all their money in it. Uh, PayPal freezes all the money in the account. They've even been known to go into the backup funding source and take as much money out as they want and then freeze that too for up to 6 months. Now, what can you do about it? Well, best practices: run your business like a business, process payroll, accounts payable, accounts receivable, same day, same time, every week, make it look as legitimate as possible, um, keep 6 months worth of operating costs in accounts that aren't connected to and are out of the reach of PayPal, but most importantly, spread your risk. Now, before we get started, okay, I just want to go over some of the myths, misconceptions, and half truths that people have been led to believe about PayPal. PayPal is no different than any other financial product in terms of risk uh, risk mitigation procedure. To give you a little bit of background on how I know this, I worked as a real estate investor for 8 years, and we were very heavily involved in the lending of high risk real estate transactions. And when buying property that was in distress or in foreclosure, the reason that we would get what is called a short sale, which is where we would convince the bank to take less money than they were owed to sell the house to us. The reason they accepted these short sales was a very simple fact. Okay, and I'm just going to use round numbers here because every lending institution has different criteria, and they're all set by the Fed. Um, but the Federal Reserve tells the lending company for every $100,000 you have in loans, you have to carry $100,000. I'm sorry, $1 million in reserves, because those reserves are there to cover defaults. So even though you've got your $100,000 house here that you're not paying on, that is stopping the mortgage company not only from collecting the rent on the money they've loaned you, but from making 10 more loans. So the bank's objective is, when they do a short sale, is to get as much of their money back as possible so that their reserves are in line and they can make more loans. And so the same thing happens with PayPal, with any financial product, because in essence, in the payments industry, when you process a credit card transaction, you are in fact getting a loan. PayPal is lending you the money, and it's not just PayPal; it's any payment processor. PayPal, Google Checkout, To Checkout, Amazon Payments. They are making a loan to you that says, this person made a charge. We believe the charge is valid and that it will be paid. It will not be charged back. It will not be called fraud. And we're going to go ahead and give you the money, access to the money now, knowing that for the next 6 months, it could be that this money never is going to appear to us. Because some credit cards will give their customers up to 6 months to file a chargeback. So basically, this is a financial product. It's a loan that is being given to you in good faith that the sale is legit. It's not a stolen credit card. It's not fraud. And again, here's the way that it works: is that PayPal, they, or any merchant account, okay, and PayPal is, don't get me wrong, they're not really a very good one. They don't vet merchants at all. And there's a big misconception about the difference between verifying and vetting. Verifying a PayPal account just means that you've proven that you are who you say you are. Your name is your name. You have a social security number or a tax ID number, and that you have a bank account that they can go to deposit money or take money out. They don't know the history of how much money you keep in that account. They don't know the history of how much revenue you process each and every month through your business, be it through credit card transactions, cash, check, money order. They don't know really anything about you and your business beyond the fact that you have a tax identification number, a name, a legal name or a legal entity name, and a bank account. They don't even know how much is in it. They don't look, they don't test, they don't check. So with traditional merchant accounts, they actually vet And when you go to open one, you have an account rep who takes your application, and they ask you for a lot of documentation. And the amount of documentation they ask for is usually related to the industry and how risky the industry is. Gary Joe Jim Bob's feed store in Podunk, Kentucky, probably isn't going to need to provide a lot of documentation. They're going to be a low risk industry, not rife with chargebacks and fraud. They don't process a high volume of transactions. So he's probably going to be asked for very minimal information. Now, if you go in there saying, I'm in the information publishing industry, well, now you're high risk. And every industry does have a certain industry average fraud and chargeback risk. There are some companies who compile that data, and then lending companies, financial institutions, will buy the reports on that data or access it in some way to determine their own risk mitigation policies and procedures for within their company. Tower Group is one of the data aggregators that checks for information and compiles the information on industry average risks, chargeback risks, and fraud risks for merchant account providers. And so the merchant account provider knows that the information publishing industry, well, that's a high risk industry. Say Gary's feed store is probably maybe a 5% year in chargebacks, where the information marketing publishing business is 20% a year is the average amount in chargebacks or fraud. And so when they look at the application, a regular merchant account looks at the application. If they see you're at a 20% average yearly chargeback risk because of your industry, they're going to expect more documentation from you. Your business and personal credit reports, articles of incorporation if you're incorporated, occupational licenses, 2 years personal and 2 years business tax returns, probably an assets and liabilities statement, and an income and expenses statement, a profit and loss statement, because they want to see exactly how much you process. If you say, hey, I process, $50,000 a year in credit card sales, and that's what I need, I need a new merchant to process $50,000 a year in credit card sales, they say, okay, well, our risk on that at 20% is going to be $10,000 a year that we're going to be risking. Now, that $10,000 a year means two things. It means $10,000 a year that may see chargeback, and it also means that it's $100,000 a year they don't have to lend out because that risk is used up in the reserves. The reserves have used that risk already. So now they've used up $10,000 of their reserves that they can lend out because of the risk factor. Now, they could go ahead and give it to you anyway, and they'd say, well, we want $10,000 in collateral. Okay, they could tell you they want 30% rolling reserves, meaning every month, if you charge $10,000 a month, $3,000 they're going to want to keep in the account, and the rest of it you can withdraw. And a lot of times they'll have withdrawal limits as well. And so, but again, what it comes down to is, for what they're risking for you, the percentage they're risking has a number attached to it, and that number is directly attached to how much they have in reserves, which determines how much they can lend out to somebody else. So if you're starting to go over that $10,000 a month or $50,000 a year in processing, now their risk is increasing, their ability to lend is decreasing, and they're going to start looking. And why would they keep you when you're costing them so much? Because you're not just costing them a risk, you're costing them their ability to lend, which is costing them money. That actually has a real hard, tangible cost to it. When they can get 10 more guys like Gary over here with the feed store who are much lower risk and will not do so much damage to their capital reserves and their lending abilities. So at some point, if they have a valid enough reason to freeze your account because your revenues are exceeding the risks that their policies say, we're only willing in this industry for this guy to take so much, put so much of our reserves on the line and be able to, and risk not being able to process this many loans for this many other people for this one guy, they're going to freeze the account, okay? And that is just the financial world. It's how it works, and we should all be glad for it, because if the lenders weren't regulated by how much they would have in reserves, our economy would have crashed a lot earlier than it did. So it is a big misconception that you have to be breaking a TOS. You do not have to be breaking a TOS for any payment processor to freeze you, not just PayPal, but anyone. All you really have to do is exceed the revenue versus risk model and in their policies and their procedures, and they'll freeze the account. So another misconception is that it takes several factors for PayPal to close your account. That's not true either. Now, probably not having a privacy policy or not having a contact page, um, any of those things are violations, yes, but taken alone, probably not enough to get you shut down. Because that could just be looked at as a minor oversight, and once it's corrected, simple enough fix. And with a proper merchant account, your account rep tells you this too. And anytime something happens, that's the first thing they'll do is they'll look for problems and tell you how to correct them. Now, again, probably not having that contact us page is not enough for them to shut you down over. They're really not that concerned about that. That's more FTC stuff that they're worried about. Making, actually, it's more stuff the FTC would worry about than PayPal. They want you to be FTC compliant, but minor oversights, they're not going to really raise big holy hell over. However, if there is one single sole factor that without any other factors being present that will get you shut down, it is that your revenues will exceed their risk mitigation numbers as set forth by their policies and procedures and their reserves, their limits. So, and here's the worst one, okay, and this is the one that I really want to just clarify. People think you need PayPal because all the affiliate programs use PayPal. Well, that's not true. Now, it hasn't been true for as long as I can remember. What is true is that the instant commission affiliate programs use PayPal. Plenty of affiliate programs, eJunkie, GetDPD, ClickToSell.eu, they are affiliate programs that process across multiple payment processors without your affiliates losing their tracking cookie to a different button. Any one of those, if you use this, they support multiple payment processors. You can process through any merchant account you want, and your affiliates will still get credited. You won't lose your affiliates. Now, for a time, you could not do instant commissions, but that's no longer true. Now we have PayGear, which is the only affiliate program that supports multiple instant commissions across multiple payment processors. The PayGear affiliate program, I just want to tell you a little bit about the program before I get into the whole how they process instant commission across multiple processors, okay? Because I want you to know just how powerful the affiliate program is. I know Chris Dowlett very well. We've been Skype buddies for close to a year. I have watched him launch PayGear. I have been a member of PayGear. I am worked with it. I have products in the marketplace. I am quite happy with what PayGear has accomplished, and I can say without doubt it is superior to any other affiliate program I've seen. There is no approval process for putting a product in the marketplace. They have over 50,000 registered members. They have plenty of categories. They give you free membership software. They have free one-click 1099 reporting, real-time analytics tracking. Just there's so much, and I mean, I'll just tell you, yes, they have the instant commission options, and they have the full options. You can choose whether or not you want to pay affiliates instantly or on a weekly basis. You can even choose a daily or twice a week. We'll get to that in a minute. But you can choose to pay either way. You don't have to pay instant, but you're not forced to not do it either. And you can pay this person, one affiliate on weekly and the other one on instant. You get the choice to approve individual affiliates for instant as well. It's not all or nothing, and I like that a lot. Now, like I said, they have a huge marketplace and they have over 50,000 members. And there's no insertion fee. It's free to list your product. They give you the free membership software. They have one-click 1099 reporting. Literally, you click and it emails all of your affiliates their 1099, plus it emails them to you. So it comes down to print, stuff, lick, the stamp, and the envelope, and mail. That's it. You don't have to actually fill anything manually in by hand. You don't even have to do data entry into your bookkeeping or accounting programs. They have one-click upsells, they have free shopping cart software, and they have the real-time analytics reporting. And with that reporting, I used to write for Demand Studios, and they paid twice a week. That was nice. It was nice to know that I was getting a PayPal deposit on Tuesday and a PayPal deposit on Saturday when I was writing. So I didn't have to always wait a full week to get paid. If I needed a little extra money in the middle of the week, I could do some extra articles, and I knew I'd get my money. Yeah, I wouldn't wait a whole week for my money. I'd wait 4 or 5 days at the most. So and with this, you can do it daily. You can do the same thing with GetDPD, who has real-time tracking too. And it's another program that supports multiple payment processors. Um, and real-time analytics reporting of I know a friend who has DPD, uses DPD for her affiliates, and basically what she does is she pays her affiliates the next day after they make the sale, because most of your serial refunders are going to refund 15 minutes after they buy. So you give the affiliate a day, and the next day, if they haven't refunded, if their customer hasn't refunded, you go ahead and pay them the commission. And with PayGear, if it should go past the day or whatever when um, the refund request comes in, PayGear will automatically go back into the affiliate's account and pull the refund out of the affiliate's account. Okay, so how does PayGear process the instant commissions? Well, first of all, they support PayPal, Google Checkout, and Authorize.net. Authorize.net is a payment gateway. You'll still need a merchant account. Chris has some excellent, sweet deals he can get you on the merchant account and on Authorize.net, cheaper than anybody else can get them for you anywhere. The nice thing about having Authorize.net is that you can process through any payment processor. And, you don't have to choose Google or PayPal. You can choose anyone you want. They support hundreds. But what happens here is that when your visitor to your page lands on the page, let's say that I rotate my payment buttons. So let's say visitor number 1 sees a PayPal button, they click, they pay, the money goes into PayPal. Visitor number 2 clicks, well, they see a Google Checkout button because I rotate on visitor. They see a Google Checkout button, they click, they pay, and the money goes to Google Checkout. Now, in either case, though, PayGear sees that the sale was made. Even though the money went to Google, they see that the sale was made, so PayGear automatically then hits my PayPal account and pays my affiliate the commission on the money that went into Google Checkout out of my PayPal. That's really the only caveat, is that you want to make sure that you have enough money in PayPal and in your backup funding source to cover commissions. But 9 out of 10 times, your buyers are going to buy through PayPal. So you should have plenty of funds there to cover those particular costs. And if you want to know how this protects your money from a PayPal freeze, because you can't protect yourself from getting frozen, as I've told you. If all other criteria are met and you are doing everything right, all you have to do is get to a point where your revenues go past what the amount of money is that their risk allotment will absorb against their own reserves, and they'll freeze the account. Okay, because they have a lot less risk when they're processing less riskier models for less risky industries. So they would rather have 10 guys who are less risky, not hitting so much of their reserves, than have one guy who's high risky, who's just gone to the point where now they can't take 5 more guys. Okay, so that's the only thing that you have to worry about, but it's a big thing. And a lot of people will say, well, if you're not making any money, you don't have to worry about PayPal. And that's true. If you don't make any money, you don't have to worry about this at all. If nothing else, though, I want you to have this for future because an ounce of prevention is worth a pound of cure. When you think you're ready to actually start bringing in revenue into your business, you want to have it thought out beforehand how you're going to offset problems. You know these problems are out there, and you know that they could happen to you at any time. So I want you to be armed with the information of how to offset the risk. You cannot remove the risk. There is no such thing, but you can offset it, and you can have some measure of protection. And by using multiple payment processors, basically what you're doing is that some sales go to PayPal and some go to Google Checkout and some will go to the merchant account. If you're using DPD, some might go to AlertPay. If one of them freezes you, if PayPal says, you know what, we're going to freeze your account, we don't like you anymore, and we don't have to give you a reason, and bye-bye, and we're taking all your money for up to 6 months, well, you can go say, well, I've got $850 in my Google Checkout account, and I've got $450 in my AlertPay account. I think with my $1250, I've got my next 6 months of operating capital covered. I can pay my autoresponder every month, I can pay my hosting every month, and I can pay for my advertising to keep my business going. And then I'll just take my PayPal button off my pages and leave all my other buttons on. And I'll still be taking money in through Google and my merchant account, AlertPay, wherever you're taking your money in. And so you have some of your money safe, and PayPal did not cripple your business. They can still freeze your account, but they're not going to cripple your business. Just change the buttons on your sales page at your will, at the time of your choice. I used to change mine every day. One day I'd process through PayPal, one day I'd process through Google. But when I got the plugin developed, the plugin automated that whole process, and now it just rotates on visitor. And I have a static button that, if the Google button is the button that's showing, there's another button that says, right above it, it says, or if you prefer to pay with PayPal, they click that button and it goes to PayPal. So I'm always giving them the choice for the diehard, I won't pay with anything but PayPal people. And the plugin is, it's a simple WordPress plugin. It automates the rotation of the payment buttons on the pages. That's all it does. It's copy paste simple, and you can learn more about that at WPProfitPerformance.com. So I hope that helped and gave you a little bit of insight as to what really does set PayPal off. What is the one most powerful factor that could hurt you? And it is a factor that is completely beyond your control. You can't control their reserves. You can't control your sales that dent those reserves and keep them from making new accounts for other people, taking more risks for other people. And so I don't want to, I really just wanted to clear up this idea that a lot of people think that PayPal they just freeze your account because then they get to hold your money and earn interest on it for 6 months. I'm not going to say that they don't exploit their ability to do that, but that's not the reason they freeze the account. And some people think that, well, they'd rather be processing your payments. Well, every single payment they process is a liability for up to 6 months. So all of those liabilities against their reserves that the Fed says they have to have other liabilities stops them from processing for other people who are less risky to process for, and therefore much safer bets for them to not lose their ass. And I hope that makes some sense. And if anybody has any questions, I'll be doing a webinar on this with Tony Grant on May 1st at 7 p.m. Eastern Standard Time. And, go ahead and just look for an email from myself or from Tony or from whoever about this webinar. And, I'll be happy to answer any questions that night live. I've tried to give you the best overview I could. I'll try to draw some diagrams if you guys need it. If you have any questions, send them to me. In the meantime, you can go to DannySchaefer.com/blog to read the blog and leave any questions or comments there. And that's it. Have a good day, everybody.